Namaste and welcome to Global Wealth Insights, your trusted source for stock market analysis and investment strategies. Today, we are diving into the Nifty 50 stocks to buy now. We've handpicked 10 powerful stocks that are currently trading at a discount, presenting a golden opportunity for long-term investors. We'll break down each stock's fundamentals and the best investment strategy to maximize your returns. So, if you're ready to grow your wealth, stay with us till the end and don't forget to read important disclaimer. Let's get started. First up, Reliance Industries Limited. This stock is down by 28%, making it an attractive buy for investors. With a 50.1% promoter holding, a pay ratio of 22.7, and a strong 15% CAGR over the last 5 years, Reliance is a rock-solid investment. Here's the game plan: buy in batches of 5 shares until your average cost per share reaches 1,250 rupees. At an expected 22% CAGR, a 10,000 rupees investment could potentially grow to about 27,000 rupees. Now that's a comeback story worth watching. Next, Hindustan Aeronautics Limited, a defense sector crown jewel. Down 45%, this stock screams buy, with zero debt, 71.6% promoter holding, and a blistering 57% 5-year CAGR. Its return on equity of 28.9%. This stock is a strong growth candidate. The strategy is to buy 2 shares at a time until the price is below 3,800 rupees. With a 55% CAGR projection, your 10,000 rupees could potentially fly to 89,000 rupees. Talk about a high-flying investment. Coming in at number 3, Tata Motors, one of India's leading automobile giants. The stock is down by 48%, offering a pay ratio of 7.09 and an impressive 49.4% return on equity, and 5-year stock price CAGR at 38% show its global dominance. Hello, Jaguar Land Rover. Yes, debt is 1.05, but Tata's electric vehicle pivot is unstoppable. Here's how to ride this electric vehicle and Tata Motor demerger wave: buy in batches of 10 shares at an average of 725 rupees. With an anticipated 35% CAGR, a 10,000 rupees stake might zoom up to 44,800 rupees in 5 years. Fasten your seat belts. Adani Power, India's leading private sector power generation company, is currently down by 46%. It boasts a ROE of 57.1% and a stock price CAGR of 59% over the last 5 years. Promoters hold 75%, they're all in. Debt to equity at 0.67, which is manageable for this massive infrastructure. The plan is simple: grab 10 shares at a time until you lock in an average price of 575 rupees. With expected returns at 45% CAGR, a modest 10,000 rupees investment could spark up to 64,000 rupees. Get ready to light up your portfolio. Our next pick is Bharat Electronics, a leader in defense electronics, is down by 34%. With a debt-free balance sheet and a 5-year CAGR of 58%, this is a strong long-term play. The strategy here is to buy in batches of 20 shares at an average price of 310 rupees. With expected growth at 40% CAGR, your 10,000 rupees could turn into roughly 53,500 rupees over 5 years. This investment is truly where innovation meets stability. Next on our radar is Siemens Limited, a global powerhouse in automation and digitalization. Despite being down 43%, its strong promoter backing of 75% and an aggressive P/E of 72 may seem steep, but its 28% 5-year CAGR and near zero debt justify the premium. In automation and smart infrastructure sector, Siemens is the future. With a 28% CAGR over the past 5 years, the plan is to purchase 2 shares at a time at an average price of 5,350 rupees. With projected returns of 35% CAGR, your 10,000 rupees could evolve into about 44,000 rupees. Embrace the future of technology. Now, let's talk about State Bank of India, India's largest public sector bank. SBI is down 24%. Stock is trading at a price-to-earning ratio of 7.87 with return on equity of 18% and a 5-year CAGR of 19%. This stock is a great buy on dips. Wait for a dip to 625 rupees to 650 rupees, then buy 10 share batches averaging 715 rupees. With an expected 35% CAGR, a 10,000 rupees investment could yield around 22,000 rupees over 5 years. Steady and reliable banking on growth. Charging ahead to our next pick is ABB India Limited, a tech leader that's down by 44%. Backed by a 75% promoter holding, a high pay ratio of 55, and a robust ROE of 28.8%, with practically zero debt to equity makes it a great long-term investment choice. ABB India has seen a 34% CAGR over the last 5 years. The recommendation is to buy in batches of 2 shares at an average price of 6,500 rupees. With an expected 48% CAGR, your 10,000 rupees could accelerate to around 71,000 rupees. Electrify your investment portfolio with ABB India Limited. Let's shift our focus to REC Limited, a Maharatna in power financing. Down 42% but with a 33% CAGR. High debt to equity of 6.58 is a risk, but its government backing and 30% returns potential make it a calculated investment bet. Let's shift our focus to REC Limited, a Maharatna PSU, is currently down by 42%. Despite a high debt to equity ratio of 6.32 but its government backing, its 5-year CAGR of 33% returns potential and decent dividend make it a calculated investment bet. Last but not least, Jio Financial. Down 48%, this Mukesh Ambani disruptor has zero debt but a sky-high P/E of 79. Return on equity is low now, but Jio's track record says never underestimate. We've covered a detailed analysis of Jio Financial in a previous video, check it out. Buy in batches of 20 shares until you secure an average price of 265 rupees. With an expected 32% CAGR, a 10,000 rupees investment could rise to approximately 40,000 rupees over 5 years. Don't forget to check out our full breakdown in our Jio Financial stock analysis video in our channel timeline for deeper insights. Investment disclaimer. This video is for educational and informational purposes only. It is not financial advice. Always do your own research and consult a SEBI-registered financial advisor before making investment decisions. Stock markets are subject to risks, and past performance is not indicative of future results. And there you have it, 10 strong Nifty 50 stocks that offer incredible upside potential. Which stock are you planning to buy? Let us know in the comments. If you found this video valuable, smash the like button, subscribe, and turn on notifications for more expert stock market insights.